Hi, everyone, and welcome back to another episode of Unlocking Venture Capital. I'm here with my friend Octavio from Illumen Capital. How are you doing, Octavio?
I'm doing well. Happy New Year. Is it
Happy New
still,
Year.
am
Yes,
I allowed to still ask that? It's January 15th.
I think as long as it's like any happiness in the new year, you can always wish it, right?
That's right. That's right.
So I'm so excited to have you on as a guest today. We would really love to learn more about what you do at Illumen Capital, and I think that our audience would get a lot of great golden nuggets out of this conversation. So I'm so excited to dive in.
Okay. So let me kick it off with a little bit about me and my journey to Illumin.
Mhm.
But at a high level, think of Illumin Capital as a fund of funds. We exist because we're trying to address a pain point and investment management. And that pain point is there's a lot of biases that trickle into decision-making processes.
Mhm.
And what does that mean? At the end of the day, if you look at the where the capital is going, they're not going to folks who look like us on the call. They're not going to Black folks. They're not going to women. And so what we do, which is our secret sauce, is we work with GPs throughout the entire spectrum and we put them through a bias reduction curriculum so that they could address their inherent biases because we all have them.
Yeah.
And so by checking their implicit biases at the door, they, in theory, are making better investment decisions, better business decisions,
Mhm.
and their team should be more inclusive.
Yeah.
So that's Illumin in a nutshell about how I got to Illumin. Um, it was quite the journey. I graduated from MIT Sloan with my MBA in 2017. Also, that year, I earned the CFA. So that means I was studying for the CFA exam while in business school. So I was a
Who
little
does
bit,
that? Who doesn't it take
yeah,
a year to
crazy
do
I
the
was.
CFA? Oh,
But
no.
exactly. And so when I passed, I looked at myself in the mirror and I asked myself, what am I going to do with this charter? And so I was fortunate to get my institutional investing start at Mass Mutual. Mass
Hmm.
Mutual is a life insurance company out in Boston,
Yeah.
300 billion general investment account. And I was hired as a director to manage their alternative investments portfolio. And then 2020 happened and George Floyd really shook the foundation of financial markets, and a lot of big players, JP Morgan, wanted to do more in terms of providing capital, access to capital to underrepresented people of color. And sure enough, MassMutual wanted someone to run a mandate to invest not only in diverse emerging managers, but also BPOC-led startups.
Yeah.
And so I was I was doing that at MassMutual in 2020. Uh, Finished deploying that capital, so around 50 million of capital that I deployed, and then decided to join Illumin Capital as the director of investments in 2021. And so, as director at Illumin, we were pretty busy. We were finishing deploying out of our fund one. And then we had a fund two, which we started deploying out of.
Hmm.
And then a couple of years into it, we launched the Catalyst Fund, which is a complementary strategy that allows us to invest in first-time funds as well as co-investments alongside our GPs. And so right now we're roughly at 300 million AUM and we're growing. So it's an exciting journey. I love what I do at Illumin. Get to see so many talented folks throughout the industry and I get to make sure that capital is flowing to people who look like us on the call.
Yeah. And I really love that. One of the things um that you touched on is so interesting. So the what happened with George Floyd clearly shook the world and created a massive impact. And the fact that it had such an impact on venture capital is something so specific. I know that there were several funds that raised around that time and everything kind of came together for some people, and then for others, it didn't quite. So I want you to speak a little bit about why that was so important in the impact space and why you think that wave happened when it did. Because it's so interesting that, this was a truly American thing. And I only recently learned about it when I came back and forth to America a lot. And I'm like, wait, I don't understand. This was not in your city, but it really was a global impact. But it happened very specifically in the US and to venture.
Yeah, that's a great question, and it makes sense. A lot of our pipeline is seed stage investors, and most of the seed stage investors, women, black led, you name it.
Yeah.
And so, why did it happen at the VC level?
Yeah.
How much time do I have? But
You can take any angle you
let's start
want.
with the low hanging fruit.
Yeah. Yeah.
The beauty of venture capital is that you are investing in the future of,
Yeah.
the country, the world,
Mhm.
and these businesses tend to be transformative, innovative, and so the best place to create wealth is by investing early into the next Google, the next Meta. And if you can find that VC investor that has a track record of finding early stage companies that become unicorns, then um, I rather back that cohort of investors. And so that's one of the many reasons why we saw
Yeah.
capital go into venture capital.
And did you see particularly LPs or high net worth individuals become LPs for the first time after this kind of catastrophic event and want to make their voices or their vote heard in the venture capital space, but as a first timer? And then how did you, as someone who is in the financial as a professional, deal with all of that inflow coming in and deal with all of these questions and that wave of impact coming in after that time?
Yeah, that's a great question. Yes, so for first-time funds, typically the blueprint for a successful fundraise include high net worth individual, family offices. These are folks who can write ticket sizes at least $1 billion. And for these first-time funds, we like to advise these funds to have a line of sight to at least 20 million, especially if you're a solo GP, so that you're economically viable.
Yeah.
And there were some notable names in 2021. You could think of many of them, but like Frida Kapoor, she obviously is known for the Kapoor Center, but she definitely made her footprint known in the VC community by investing in first-time funds. Um, a good friend of mine is Sydney Thomas, Symphonic. She invested in that fund, and the list goes on. And in fact, she even hosted a big dinner at her house in Martha's Vineyard to cultivate relationships for these Black VCs and in the area who happen to be in the area so that they could start thinking about fundraising for the next fund.
Yeah. And in terms of what you see on a day-to-day basis, how do you yourself assess and manage risk when you're evaluating these kinds of potential investments, for example, emerging funds versus established funds?
Yeah, it's a great question. We see roughly 600 funds a year,
Oh
and
my
so
God.
it's a lot. And luckily we have a process that tries to reduce biases and even
Mhm.
our decision making
Mhm.
capabilities. And so we have each fund that comes in our pipeline automatically submit what we consider a type form.
Okay.
It's a intake form, and we ask, basic information. It's like a preliminary DDQ, due diligence questionnaire. And based off that, we will determine whether we should have an initial meeting or not.
Yeah.
And these initial meetings typically are 30 to an hour of us, asking questions around the investment strategy, the thesis, do they have the right team? Is the opportunity set there? And the list goes on and on. And so that's how we manage our intake process. And we have a mighty team of three. I am accompanied by two others. And so those 600 funds
Yeah.
are allocated appropriately or
Okay.
equitably across the team. And so we try to meet every Monday to go through our pipeline. And there's a fund that I met maybe through sourcing through, Equity Alliance Summit.
Yay.
And the person put in the intake form, hey, I met Octavio at Equity Alliance Summit. Then obviously that fund gets assigned to me, and then we continue the conversation. I
Yeah.
get feedback.
Okay.
But in a nutshell, we try to be equitable and we try to give feedback as much as possible.
Okay, that's great. I love that. And that is not easy to do in our industry at all because we already exceed 40 hours of regular work. And so providing feedback, creating these reporting, whether it's to founders or funds, it is actually quite a lot of extra load on yourself, and only you have it in your head because usually we work in small teams. You don't have other people to possibly help you with any of this, right? And so managing these relationships is really important. And so would love to understand from you, for a first-time fund manager, for example, what would be your number one tip to them as an LP?
Yeah. Well, at the end of the day, fundraising for a first-time fund is extremely hard. You have to fundraise, right, which is never fun. Then you have to source the best deals and win these best deals. And then you have to take care of your portfolio companies, help them when they're in need. And then if you do all three correctly
Yeah.
and efficiently, then you have to do it again. And so at the end of the day, we advise our first time funds to think of a business as opposed to thinking of their fund as just that fund.
Okay.
And so what does that mean? What is your vision?
Yeah.
Um, how do you think about succession planning? How do you think about team growth? Are you going to be a solo GP for, the next 10 years? And I see that institutional investors are becoming a little bit more comfortable with solo GPs. However, based off my training, not at Illumen, but elsewhere,
Mhm.
solo GP create risks, right? What
Yeah.
happens if that GP gets hit by a bus? We
Yeah.
never know.
Yeah.
And so that's why it's very important to, invest in the team, making sure that if something happens to the solo GP, the team can, step in.
That these are really, really great tips. And it's the same that happens with founders. So in some term sheets, we actually see death clauses in case you're co-founder, like in case this
That's
happens.
right.
And
That's
so,
right.
yeah, that's an absolutely fair thing to say. I want to dig a little bit deeper in terms of the impact side. So I do know that it's very important to first and foremost be focused on impact, but how do you get to differentiate their thesis if they all sound somewhat similar? We want to invest in underrepresented founders. Okay, great. So then what's your follow-up? How do you dig a little bit deeper from that? Because it can sound very surface level at the beginning, and then after you have given your money, you may or may not be in the room and have that kind of visibility afterwards as an LP, which is something that I know have been an issue across social media, that they don't have the same visibility afterwards as well. So what kind of guardrails or what kind of structure do you put in place to kind of vet that out?
Yeah. Obviously, during our initial meeting, we always we ask questions around the portfolio construction. And then if it's a first time fund and they haven't deployed any capital, we look at their track record from a previous firm
Mm,
or angel investments. And we would ask, okay, what percentage is portfolio, what is angel or what it is, it's their track record from their previous firm. Uh, have women founders? What
mhm,
percent has Black-led um, management teams, and the list goes on and on. And we're proud that everyone is, very transparent. We see funds that we invest in that actually wants to partner with Illumin because they believe that we can help them um, be more inclusive when it comes to hiring. In fact, there's a case study that we have. We work with a GP as your traditional GP,
Mhm.
plain vanilla, no pun intended. And they didn't have a woman partner, and we thought that one of the principals was contributing at a partner level, and we wanted this GP to invest in more diverse companies. We had the metrics, um, their fund one and fund two, 0% was invested in, let's call it Black CEOs or founders.
Mhm.
0% was invested in women founders. And then when we got in fund three, the fund four and five, you're starting to see 33% invested in women. And so you're starting to see the value added just by working with Illumen to make sure that, they're being more inclusive. And that's one of the reasons why we need more Illumens in this world, because if it weren't for us, we wouldn't have moved the needle
Yeah,
in terms of where they're deploying capital.
I completely agree with that. We do need more lumens in the world. That's absolutely true. And in terms of how you're seeing the trends in the future of impact investment, what do you see in terms of, kind of closing some of those gaps that you've mentioned? And do you see that coming in the near future, in the next 5 years, or do you see that more in the far future, and why?
And when you say impact, what do you mean specifically?
So, as you guys are investing in underrepresented fund managers, for example, that would be social economic impact. If you have specific kind of verticals, that's different impact. But
That's right.
but yeah, so in terms of your specific thesis.
That's right. So we invest in five pillars:
Hmm.
um, health and wellness, fintech, ed tech, um, climate change, and then the last pillar, which we consider inclusive systems. That's investing in founders that has a product that serves underserved markets or underserved communities. Um, and so we think that right now, what's top of mind for a lot of impact investors, these wildfires in LA. Last week I was in California and Oakland, and I had to
Oh,
cut my
wow.
trip short. I was supposed to make it to LA to meet a bunch of our portfolio funds out there,
Mhm.
and it was real. And
Yes.
so um, we need more, yeah, we need more climate tech funds out there trying to figure out how to solve these wildfire issues. It's just mind-boggling that, these fires are spreading quickly and they're under, well, not they are under, but the budget there's not enough budget to, cover the resources that's needed to fight these fires quickly. And so we can't just rely on the government, is what I'm trying to say. You have to rely on the private sector. And again, as I mentioned before, there's a reason why venture capital was getting all the dollars earlier.
Yeah.
Um, they are investing in innovative companies, and we
Yeah.
need companies that can innovate and figure out how to solve these wildfires, because we don't see them going away, and it's top of mind for everyone.
Yeah, and also just like the traditional industries are not covering certain things that are related to climate change, such as fires. And
Mhm.
so the fact that, these giant conglomerates are changing their policy, what are the new companies doing to fill in those gaps? Or what are we doing as a society or
That's
as a
right.
community to fill in those gaps, right? Because you're
Right.
still leaving more and more people out, but this time it's almost on purpose. So that's a wild thing to be experiencing, and I'm glad that you didn't have to go and stay there. Um, yeah, that's really interesting. And so, in terms of the transparency and the reporting that you normally get to receive as an LP, what would you say was like your best case scenario example, and what would you say is please don't do this as a red flag to all future emerging fund managers that will apply to you in the future?
Yes. Let's take the latter, because I
Okay,
want to end with positivity.
good.
Um, and so we understand that quarterly reporting, the valuation could be stale,
Mhm.
right? So if you know So right now we're in Q1 of 2025. And so let's just say I just got investor reports as of, 9:30 and the valuation was X, but then something happened in December of 2024
Mhm.
and that valuation should have been written off, you
Okay.
know. At the end of the day, this is a trust business,
Right.
right? You're asking LPs for capital. It's hard for me to ask for $1 from my mom, and we have all the trust in the world. So can you imagine just, building relationships with folks who don't have your background, and you're asking for millions of dollars? It's a whole process. That's what it takes, on average, a year to, cultivate a relationship with an institutional investor. So
Yeah.
that being said, trust is very important, and so you have to be very transparent.
Yeah.
And so that transitions to the next segment. The best reporting I've seen was super transparent. They invested in third-party vendors to help tell the impact story. They,
Wow. Okay.
mhm, yeah, it's a trend now. Impact analysis. They invested heavily in designers to really tell the story. A lot of the times, I'm sure you can relate. A lot of the times, these are seed funds or early stage investors, and the valuations are pretty much held at cost. And so, how you tell that story? And so they do a great job of showing revenue growth, new contracts, and they give good reasons for why they're excited about that company, even though it's held at cost.
So it really is like a plus to like, hire an external auditor to provide that non-biased layer in the reporting for your LPs. That's so
Well, it's
interesting.
required, yes.
And it's also required. Yes.
Yes, yes.
That's really great. And I really do feel for them in terms of that when I was a founder, it's really hard to tell people when you're not doing as well as you wish, or it's time to give updates, but you're like, but can I give updates tomorrow or next week when I have a really good update? And that feeling is always like you're in a hard rock, like a between a rock and a hard place situation.
Yeah, I see that. And at the end of the day, it's a relationship, right? And in any relationship, there's ups and downs.
Mhm.
And if you try to, hide the fact that there's a loss in the portfolio, eventually you're gonna find out as
Yeah.
the, LP. And so it's better to get ahead of it.
Hmm.
Uh, and so institutional investors are known for re-upping with GPs over multiple funds,
Hmm.
vintages. Um, Typically at least two fund vintages because it's really hard to evaluate whether you're going to re-up with a GP based off one vintage.
Yeah.
Typically they come into market, every 2 to 3 years and the portfolio is not fully baked. So with that said, you give them some grace and if these GPs are extremely transparent, and they're calling their biggest LPs and say, look, this happened. This is our shared learning. Do you have any, pieces of advice for me?
Hmm.
Um, I'd rather have that phone call up front. And I have had that phone call, and it makes me more comfortable that this GP is going to figure it out. No GP is perfect. No investor has, just made 100% money on their investments, right? So
100%.
there's gonna
Yeah.
be losses, is
Yeah.
what I'm trying to say. And if these GPs have a mindset that they're coachable and a mindset of oversharing, over communicating, they're gonna be fine.
I love that. And I see actually quite a few of my friends going towards mission-driven funds because they themselves didn't feel that the fund that they were currently at, for example, had the same thesis that they personally would have had. And so, I've always encouraged them to be LPs in funds if they can and things like that too, if they weren't like doing a full shift. But if they were doing a full shift, some of them are seeing this as a very interesting trend and would love to get your take in terms, just in case you're seeing some resources or things like that. that are working out. So you mentioned before that there were some funds that, for example, did not have a female lead as a GP or, a lead partner or an MP, right? And so, yes, that is true. And one of the reasons and one of the trends is that people of color, women, were underpaid from their previous industries, their previous jobs, not necessarily in VC, right? So to be able to take a promotion, you have to buy in, just like as to be a GP, you have to buy in. And so there were a couple of private programs in some Canadian funds. They were not publicly available for everyone. They were like within the firm kind of a thing, right? That if you were to get promoted and you couldn't afford to buy in, this is how they will help you. I was wondering if you're seeing a trend, that would help close that kind of gap, whether it's a buy-in or whether it's any kind of support to encourage people to apply to, social impact funds that would help that disparity, right? Because you want to do something that you love. You also want to continue the lifestyle that you currently have at the fund that you're with, or not having to say no to a promotion because you couldn't afford it. And that is just so heart-wrenching to hear that see people go through that. So I was wondering if there were any resources or tips that you have.
Yeah, the tip I would say if you're getting promoted to partner at a established firm or fund, you have all the power in the world to start your own fund. And
Wow.
there's ways around it. There's ways around it. Institutional investors that are, more empathetic, like the Lumen, the foundations that are backing women-led first-time funds like Ford Foundation.
Yeah.
There are folks out there that it's okay that you don't have a 1% GP commit, but you have to show some other type of way that there's skin in the game.
Yeah.
And there's ways around that as well. And so if you could show that you have the deal flow, the sourcing edge, and you just need capital, there's a lot of capital out there. And so start your own fund to the women that are in that position. We want to see them, be successful.
That's amazing. What a great tip. And thank you for that, Octavio. That is wonderful. And personally, I always feel illuminated when I get to speak to you. I feel
Awesome.
so I'm really, really glad that you got to come on the show and share your knowledge and share your tips. I think it's super, super helpful.
Thank you for having me. Till next time.
Yes, and thank you everyone for joining us on an episode of Unlocking Venture Capital.